We're going to talk about an 85% correction. I know it's a bold claim, sorry, but I'm going to shock you. We're going to talk about halving cycles. We're going to talk about the past. We're going to talk about why I've had a 16th of May market on my older charts, why it's significant, and why we could be seeing a bigger bull market and a smaller bear market long term. So here we are. On the screen, you can see what's happened to Bitcoin. We've fallen quite significantly, and we're going to do a lot of data analysis on the past in a second. But the one thing I want to make it very, very clear to you guys is the fact that, yeah, it may be doom and gloom, but this is where the opportunities lie. If you've been following the wrong people, sorry. If you were the person who decided to give me a little bit of grief the other day on the back of Wednesday's video, well, you look a little bit silly now. But don't worry, I'm a forgiving person. Now, halving happens every 4 years. We are pretty much halfway. The 16th of May was the first week after the 11th of May in terms of the chart. Basically the 2-year anniversary of the halving. We have got another halving coming up in 2 years' time, pretty much. Now, that is what that marker was for. It was a significant date because of what happens in the past. BTC always pumps before, during, and a bit after a halving event. It then tails off, usually between a certain date mark, usually between 400 and 500 days. We're getting up towards a 2-year mark where statistically from November, it's been pretty much bang on. So that is what we're going to talk about. That's what we're going to go through in this video and why it's very, very important. You notice certain things in the market and how maybe you should be looking to invest and improve your investments. Now, let's go on to it. Let's go on to this chart here. We're on the log scale. We're going to go back all the way through it. And the data that we've got is pretty, in my opinion, significant. What I've spotted is the bull markets are getting longer and the bear markets are getting shorter. Simple as that. If we're going to go from the high to low, for obvious reasons, there's a lot of consolidation within that. There's a lot of periods where it's a bit iffy. But if we're looking at raw data, that is what we're going to go off. The first halving, realistically, what we can really get the data from, 366 days from the halving event up until obviously that. But every single time, there's a run-up. You can see that very, very clearly. There's a run-up. So these bullish periods are actually a little bit longer. But from halving onwards, they're lasting longer, which is important. That is an important step. But the one thing with this, you'll probably already notice, is BTC hasn't really rallied as high this time, but we will come on to that in a second. Now, if we're looking at the overall data from this low to this high, for obvious reasons, it ran up about 740 days, and it did well. Let's be fair, you would have made some money there. But that is just one part of the story. The second part of the story is obviously the downtrend. We did approximately an 86% correction, pretty big, in a matter of 409 days. Just over a year. Pretty brutal. There was obviously a big fundamental element to that. Mt. Gox crashing was a big thing, but ultimately data is there. Now again, looking at the same situation where what have we got here? Roughly around the 2-year mark, we had a bottoming out period, or essentially that element of this chart, we did have that. But what I'm trying to say is those bear markets are now getting shorter than what they were in this period, which I will explain in a second. So we have yet again another run up towards the next halving. This next halving was the last bull market, and this was a 526 days between the halving date and ultimately the topping out period. If we're going to go from this kind of low point here, which is technically the start of the run up, we did a much higher return, around 844 days. Okay, we're increasing. Remember that number, 844. But what we've also had here as well, we've had this 365-day bear market where it was pretty brutal. Yes, it went a little bit random here for a while, and we also went up, but the COVID crash kind of happened. Technically, this could be a blip on the market, but we'll see. If we're going to look at that, was the run-up, the rally from that halving happening much earlier? Don't know. That's the ultimate thing. But we were looking pretty strong. There was a lot of Ponzi schemes in this period. Cloud token, etc. What was the other one? Plus token. But let's just take the data from here. We still had a significant rally all the way up, you know, a 400-day rally, essentially, give or take, from that point for the first all-time high. And you got to remember, we also had an additional all-time high. So, let me know in the comments what you think. If we are going to go from a much lower base point from this point here, maybe from the rally, we could be looking at over 1,000 days. So, again, situations. We are currently at 545 days, from the halving period to the all-time high of BTC right now. We are currently 177 days into a downtrend, technically, on the overall kind of situation where we have not created a new high from that point. So that's important to note. But as I say, you're probably noticing one thing and one thing only, that the bear markets have been getting significantly shorter, certainly when you look at the last two. Are we going to get something lower than 365 days? Well, potentially, even if that does happen, right? And obviously, again, I've missed out something. Look at the return on the drops. 84%, 86%. That's interesting. Are we going to see that happen again? Well, potentially. These fib levels are not here by accident, by the way. These are here to element and show you where price could potentially go. 22,000, 11,000. This is why people are talking about 12K. It's not a coincidence. It's there, right? That is why. So if you're going to get a bit antsy about a potential level that could, not a prediction, just a level for reference points, don't get upset because that could well happen, right? Just keep that in mind. So let's just say if we do a 365-day correction or a bull bear market transition sort of thing where we're kind of into it now, potentially, and we do that, we're going to be going to roughly around November time 2022. That does not scare me in the slightest, because I'm going to explain why in a second. But the thing that might scare you is this. What about if I drop this down to 84 or 80%? That would give us to roughly around that 11, 12K marker. Just as a point of reference, not a prediction. But if you know it's there, you don't know how long these are going to last until it happens. Now, again, it's not financial advice. It's all speculation. We're going off past data. And to get a gauge of the future, we've got to look at the past. Now, the question that I've got is, if we are going to go for 365 days, right, give or take, right? We'll go with that. We have a significant run-up from 2023 up until the next halving cycle, which, let's be fair here, isn't a bad place to be, right? Isn't a bad place to be. We're looking at approximately early 2024, 2024, March, April time, right, for the next halving. So that would give us at least a year to really gear up for that. And that could be a significant kind of cycle kind of element where if we are looking at that, we could be looking at like a 300 to 500 day rally run up. Give or take, obviously, that if it is bottom areas, there will be probably elements of horrible consolidation and a bit of iffiness. But let's just say we could be getting at least a year rally point to the next halving, which will be more significant, more scarcity, more utility, more adoption. Winner, winner. So you should be looking at this video in a huge opportunity kind of tale. Now, again, as I say, it's all speculation, but we've got to look at two more things before I go. One, you can get some nice passive income if you want to while you wait. And I highly suggest you have something away as profit and working for you, regardless of what you have. If you're using stable currencies, whether that is Tether, USDC, whatever it is, there is a lot more on here now. And as I say before in previous videos, here's a disclaimer to this. If you're in America, sorry, the interest accounts are not a part of the SEC Act or the Securities Act of 1933. Anyways, if you are looking at certain assets, let's just talk about the stable currencies, whether it is GUSD or whatever. You know, if you are going to lock up for like a year or two and you've got a decent chunk from this bull cycle, some people have, some people don't, I know that, but there's money there you can throw into the market for free and ultimately you don't have to worry about it. One thing as well with this, I've mentioned it before, you can change your cash out. If you want to get paid in BTT, you can. That would be awesome. Anyways, we need to talk about this. Before I go, cryptocurrency, Bitcoin, etc. has not had a recession. If we're going into a recession, we're going to sink lower, which could potentially happen. Yesterday, I mean, even today's the futures are looking pretty bleak. And yeah, yesterday was a bleak day. So maybe the speculation on here with the percentages, I might not be too far away. I might not be too far away in terms of a potential correction going down to maybe even like a 60-70% correction, and BTC can be quite significant. But ultimately, your altcoins are going to get absolutely crushed. You've got to remember that. So I know it's all doom and gloom right now. I'm trying to prepare you mentally that the fact that if this is a bear market, this is the data from the past ones. If we are going to see a smaller one, we could still be going to at least October, November, maybe even December 2022 this year. But ultimately, they are getting shorter, and we could see it go a little bit more interesting longer term. The scarcity factor on Bitcoin halving is huge, right? Hugely important. And the next one is, we're looking at quite a lot of blocks. But if we are looking at the next sort of date, we are looking at roughly, March time. Could be fun.